Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton, as well as Managing Director of International Content, Emily Parker. Good morning, Emily, and good morning, Lawrence.
Good morning.
Good morning. All right, let's take a look at what Bitcoin's doing right now. It's taking a bit of a breather. 55,118 on CoinDesk's Bitcoin price XBX index. Now taking a step back at 3.4% over the past 24 hours, and the CoinDesk Ether price ETX index is at 34.71. ETH is ahead almost 2%. And the CoinDesk DFX, CoinDesk's DeFi index right now is at 565. Now, DeFi is also making an advance. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So, Lawrence, tell me a bit about what's moving markets right now. And we do have an inflation report just out.
Yeah, the inflation report came out 0.1% higher than expected. So we're looking at 5.4 instead of 5.3% on an annualized basis. The crypto markets didn't react to it at all. We've had a pullback down to 54,000. This is psychologically a support level around the 200-hour moving average. But if you step back and look at the 200-day moving average, that's at 43,000. The 50-day moving average at 48,000. Still a bullish signal long term for those who are maybe hodling for some time. That it's bullish. But again, we had a big run up last week when we had that purchase of about 1.6 in the perpetual futures market, 1.6 billion. And perhaps that enthusiasm has waned a little bit, and leverage has gone down in the markets, according to Amkar Gadboli's report today. That leverage has gone down, so we might see less volatility, and at the same time as we come down, so not as much leverage. But and one more thing, Shatner's going to space, so maybe everyone's holding off on that.
I did see that. I saw his new uniform. Very, very cool. Also,
Rocket
Emily,
Man.
taking a look at the NFT market, that's red hot. Coinbase is getting in. FTX.us is getting in, giving OpenSea a run for their money. Can you tell us a bit about that?
Sure. So Coinbase caused quite a stir by announcing they are getting into the NFT space right after FTX.us announced that they would be doing the same. What's interesting about this is that Coinbase is placing its bets on Ethereum-based NFTs, whereas FTX is focusing more on Solana-based NFTs. So it's kind of going to be a very interesting competition. Clearly, the two exchanges have different ideas about where the future of NFTs lie.
That is interesting. Sam Bankman-Fried, who's the CEO of FTX, also has been pumping up Solana for a long while. So it's interesting to see that investment go into the Solana ecosystem. All right, let's take a look at our crypto markets guest.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
So retail traders are not driving Bitcoin's latest bullish surge, according to new data from market making firm B2C2. And joining us now to discuss is Rob Catalanello. I'm sorry, I'm mispronouncing it. Catalanello, co-CEO at B2C2. I got to take another stab at it. All right, Rob, thanks for joining us. Can you tell us a bit about the major findings of your latest data? So retail traders are not behind this latest surge.
Thank you very much for inviting me on the program this morning. And yes, our data shows that, if anything, our retail clients are actually better sellers. But for all of ever since the latest China announcement about Bitcoin trading and the legality of it, we've seen good outflows from our clients that face retail. As we are an institutional market maker, we don't face retail directly, but we do face various retail brokers and crypto exchanges that do. But that has been more than made up by inflows on the institutional side. So we would consider both our retail broker and our crypto exchange segments to be generally retail clients. We have two factors to our business. We have an exchange market making business, which we do significant amount of our volume on. But then we have over 600 over-the-counter clients, all institutional, that we do probably 30% of our volume. So net, what we're seeing is retail really sell, but the demand from institutional accounts, not only traditional crypto institutional accounts, but also the TradFi names that are now trading with us in crypto, really aggressively getting involved in the space. And most of that buying has been in Bitcoin and Ethereum, I would say.
Hi, Rob. This is a super interesting finding. Can you just break this down for us a little bit geographically, though? Because it seems like in terms of retail versus institutional interest, it must vary a lot by country. Like if you look at Japan, for example, Japan is almost 100% retail as far as I know. So I'm just curious, like how did you break this down across the world?
Sure. So we look at it in three different regions. We look at our business in EMEA, in the Americas, and then in APAC. And APAC, of course, includes Japan. It's funny, in EMEA, it's been pretty much split 50-50 sellers, buyers. But in the Americas, where we have a much more institutional account base, we've had a strong buying interest. And in Japan, really a lot of the flows that we have seen from our retail franchise. And we were very early in Japan, focusing on retail exchanges and brokers. That's where we've seen the most aggressive selling by that client base. So I would say, APAC's kind of leading the way on retail selling. EMEA, it's more split, but in the Americas, we've seen a dramatic pickup on the institutional side in buying.
So, Rob, what's the time frame that you're looking at with this data? Is it the past month, week? What are we looking at here in terms of time?
So our crypto bits piece, that's a great question. Thank you very much. Our crypto bits piece was a mainstay of our offering. We've recently brought it back. But the data we're discussing today was for the week of October 3rd to October 10th, 2021. And we're going to continue to publish this on a very regular basis now.
What kind of what would you say is the overall narrative as to what's causing all of this? I mean, how much of this is related to some of the capital markets crisis, if you will, happening in China right now when it comes to the real estate market there and some of the concerns? I mean, are you seeing any of that in your data? And otherwise, how would you interpret all of this if you put it all together?
So that's a great question, and I would say yes. Ever since the announcement about the restrictions on crypto trading in China, and that kind of coincided almost with the rumors of default of various Chinese corporations, et cetera, we have seen very, very strong interest from our retail sector, as we classify it, really to just kind of liquidate crypto positions. And we really haven't seen it slow down. If anything, it's a steady, we've seen continued selling. But the very encouraging news, at least from where we're sat, is that institutional pickup has increased not only with us, but if you look at, for example, the CME basis or something, which is a venue that a lot of institutions use as well that won't trade on an unregulated exchange, or who are in the onboarding process with someone like me, that's where they will go to execute their crypto business. And that basis has really been blowing out, signifying strong institutional buying.
So while the institutions are buying what the retail is selling, do you think that that's sort of a short term, just for the sake of providing that liquidity to the retail? In other words, they're saying, okay, fine.
I don't necessarily think so. I imagine that if we continue the bullish move, people that either got burned back in May and June, or who have recently sold, and as they get a better feel for what the actual ramifications of the news from China will re-enter. So it's very, it's not necessarily that, that one is providing liquidity to the other. I don't think it's just, it's a coincidence, and it's actually very refreshing because, a couple of years ago, the sort of selling that we're seeing from either a whale or like, remember the old whales or retail really would have really had a very negative effect on price action. But we're seeing it all be absorbed. And our belief is that as more people get comfortable with the space, as there's more clarity on regulation, that will only increase institutional participation in our markets, and it's something we look forward to.
So one of the goals of China's crypto crackdown is actually to rein in some of the smaller retail traders in China, right? That's what they're trying to do. They're trying to raise the barrier to entry for retail trade. Do you have any sense at all of the impact of retail trading in China specifically? I know it's really hard to get data on that, but just, what is kind of happening with that demographic? Because in theory, this crackdown should be targeted at them, right? Like making it harder for them to trade OTC. And we're not really seeing like the price move downward. And so it's kind of a black box in terms of the retail situation in China.
Yes, and unfortunately, that is a great question, and we didn't have that significant of a presence onshore in China with retail. So, it's really nothing that I can speak to directly, but I can say that the spillover effect in with our other clients in that region, has really followed through it, and that's where we're seeing the majority of our selling on the retail side.
Do you think, is there any part of that on the retail, on the institutional side, in the buying, and is any of that do you have any suspicion or any reason to believe any part of it is from China as well?
No, no real suspicion. Like I say, the majority of the institutional adoption that we're seeing is happening here in the Americas region. So either through your traditional sort of crypto participants, crypto hedge funds, or more importantly, the traditional finance types that are now have started crypto funds or who have allocated a certain amount of capital to trade crypto. That's really where the buying demand has come from our perspective.
Okay. Rob, some interesting data points out there. Thanks for joining us this morning. Appreciate your insights. That was B2C2 co-CEO Rob Catalanello. All right, coming up, checking in on Asia and a global crypto adoption survey from financial comparison website Finder.
CoinDesk indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, October 13th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Crypto exchange Coinbase has become the latest to dive into the NFT space. Meanwhile, rival Binance, which got into NFTs back in June, has announced a $1 billion US fund it hopes will bring 1 billion new users into crypto. We're going to take a look at what they hope to achieve and a whole lot more coming up. Let's get you up to speed from Asia to the world. First up, two of the world's biggest crypto exchanges have made moves to diversify their revenue streams. Coinbase has announced the opening of a wait list for early access to its NFT platform, which it claims will make minting and buying NFTs easier than ever. And Binance has announced a $1 billion US fund to push adoption of its Binance Smart Chain and develop the blockchain industry. Forecast News' Monica Ghosh has a lot more from these two.
The peer-to-peer marketplace Coinbase NFT says it will help people create NFTs by tapping a few buttons. It also says it intends to provide a social platform, creating a community for artists and buyers. It's not the first time Coinbase has attempted to expand its offerings to boost revenue. However, the lending product it announced in June was scrapped after the US Securities and Exchange Commission said it intended to sue if it was launched. Coinbase has also come under fire from customer complaints, with several responses to CEO Brian Armstrong's tweet announcing the NFT platform's launch, slamming the company's poor customer service. Meanwhile, amid problems of its own, Binance is also looking to grow its business. It says the vision for its Binance Smart Chain Growth Fund is to introduce the decentralized world of gaming and financial service to the masses, as well as promoting awareness of Web 3.0. Under regulatory pressure, Binance has pulled back from Singapore and Australia and is in hot water with regulators in other countries, including Japan and South Africa. With more and more non-crypto challenges getting involved and putting a squeeze on trading fee revenues, diversification seems a wise move. For Forecast News, I'm Monica Ghosh.
Meanwhile, stablecoins are seeing some regulatory instability, you could say, as more face scrutiny. An IMF report on global financial stability released Tuesday says that challenges for the crypto ecosystem, where some stablecoins are concerned, include inadequate reserves and disclosure standards. With international regulators looking to improve oversight of the industry, experts told Forecast News a clearer regulatory regime could actually help catalyze adoption. Forecast News' Carolyn Wright reports.
Stablecoins, which are typically pegged one-to-one to fiat currency and designed to minimise price volatility, have experienced massive growth in the past year, with total market value standing at over $130 billion US. However, a report by the Financial Stability Board said vulnerabilities in the space have continued to grow, and ensuring appropriate regulation and supervision across jurisdictions is necessary. Crypto experts told Forecast News it's no surprise stablecoins have attracted increasing regulatory attention due to the potential market impact.
This has led to global regulators looking to treat stablecoins and the companies behind them as true financial instruments, or even like banks in some cases. This should lead to stablecoins ideally having little to no credit or liquidity risk in case of default.
Con says this attention means that post-regulation, stablecoins would theoretically be more trustable. And Julian Hosp, Cake DeFi, says regulation offers multiple benefits.
It will validate the entire ecosystem. So small businesses will have the opportunity to become global businesses with the access, and they feel secure that the ecosystem is actually working. For ecosystems and regions that are normally excluded, there will be, or there should be, some financial inclusion.
Implementation of regulation is currently uneven across Asia. China has prohibited trading of any cryptocurrency, including stablecoins, while earlier this year the Bank of Thailand outlined a framework for regulating stablecoins. And the Monetary Authority of Singapore has granted a major payment institution license to XFAS, which issues XSGD, a stablecoin backed one-to-one by the Singapore dollar. For Forecast News, I'm Carolyn Wright.
And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
All right, let's have a live look at Bitcoin right now. Bitcoin at 55,068. Bitcoin is pulling back about 3.7% over the past 24 hours. And the CoinDesk Ether price ETX index is at 34.61. ETH is advancing ever so slightly at 1.6% for the day. And the DFX CoinDesk DeFi index is at 565. DeFi is making gains of about 5.7% over the past 24 hours. Now, financial comparison website Finder publishing a global survey on crypto adoption around the world. Joining us now to discuss their latest findings is Fred Schebesta, CEO and co-founder of financial comparison website Finder. Hey there, Fred. All right, so tell me a bit about this survey. How is it conducted, and what are some of the key highlights?
Yeah, so this is one of the very first global, cryptocurrency adoption surveys. We actually surveyed 41,645 people around the world. It's a very rigorous study. It's the biggest one Finder's ever done, and obviously we're a global comparison site, but it took us a long time to do this, so we're pretty excited about what we've done. And then there's some pretty revealing results in terms of some of the ownership and some of the different percentages all around the world, and the different coins as well as to what people are interested in by country.
So, Fred, how are the people actually selected? How did you go about getting all the people to respond? And what kind of controls were put in place so that the people who did answer weren't self-selecting, but were reflective of the general population that you're surveying?
Yeah, so we essentially used a global survey company for this one. Normally, we've done a lot of surveys, probably hundreds of them through Finder, and this one we spent a lot of money on this one. I just put it that way, and it's been essentially diversified, split between male and female investors. It's also done by country. Because obviously we're globally surveying all the different countries as well. There's 22 different countries actually involved with this one, and it was done in September.
So specifically, though, these are people who are categorized as investors. In other words, people who have investors in what? Are they equity investors or crypto? Like what exactly are they? I mean, if you go to any given country, even the United States, you have a large portion of the population that isn't invested in anything other than, and not even they're not even putting money away for retirement. So how are you selecting this population? What exactly is it specifically that these are investors?
Oh no, so it's not. These are not investors. I'd say the more sort of the everyday American. It's not just investors. These are just the everyday person. So it's trying to say like how adopted is cryptocurrency around the world for the everyday person in that country.
So I believe the other cryptocurrency adoption survey out, or it's not actually a survey, rather it's a report, is by Chainalysis, correct? And they, I believe that they put Vietnam as number one, at least in one of their recent surveys. I'm just curious if you're aware of this, and it doesn't look like Vietnam's even on your list. How is there such a big divide?
Yeah, I think, well, obviously Vietnam's probably, this analysis wasn't done with Vietnam, but Nigeria has a population of, which is the top of our list, is 200 and it's like over 200 million people, and it's a massive country, and it's massively into cryptocurrency. What we've seen, and we also see that on our website as well, on Finder.com, with all the comparisons of the different cryptocurrency exchanges. I think it's more interesting to look at the different coins. So actually, in America. Like Dogecoin is pretty much as adopted as Ethereum is. And I think that's very interesting in and of itself. Maybe, that sort of, popularization of coins and things like that, I think is really interesting. I think it's also interesting if you break down the different coins by country. So, Japan's very big into Bitcoin. And so is South Africa and Singapore. Whereas, if you come down to, say, Cardano, Australia, Ireland, and Russia are the top countries, and that's really unusual. I would have thought Binance Coin is very interesting as well because it's actually quite popular in Indonesia, and then Mexico being the second most popular, I think, is very interesting, and then Russia again. It kind of has that, I guess that it's an unusual exchange in terms of it appeals to certain people, but I think this sort of talks to that in some way. And then Dogecoin is the most popular in America. So Americans love Dogecoin.
Just quickly, I just want to clarify on the international point, though. So Vietnam was not actually surveyed, so that's why it's not on the list, not because cryptocurrency adoption isn't high. And I was wondering, did you look at, like, for example, mainland China at all, or is that because just to understand where some of these big players fit in, so they're just not actually in the survey?
No, cryptocurrency, is not exactly it's pretty difficult to operate in China. So I think the results may not be, if you're asking someone if they have cryptocurrency, I don't know if that might produce the best survey result.
So, Fred, one of the charts that you have in your study, and if we can call it up, it looks at Bitcoin relative to or Bitcoin ownership, the percentage of total ownership. And I noticed that in the U.S., your data shows that about only half of the people who own crypto own Bitcoin. So you're saying that half of all people who own crypto in the United States don't own Bitcoin. Is that correct?
That's correct.
So how is that?
We can't wrap our heads around that one.
Yeah, I mean, it's like usually, isn't that usually a higher number? I mean, you're saying that people just jump right into Doge and they've never heard of this Bitcoin thing, whatever, doodad that they.
I think people. So this is people in America seem to love Dogecoin. It seems that's. And I think then there's the Shiba Inu that was not on the list in this case, but it's a very popular coin in America.
But that's part of I guess that goes back to the question of how are you surveying this? Because if you just look at the data in terms of the actual raw market data, it wouldn't suggest that Doge has significantly outpaced Bitcoin. In any capacity. So are your survey is your survey population biased or
this doesn't necessarily indicate the size of ownership. It's just whether or not they do own the particular coin. If you look at the S1 filing of Robinhood recently, it was Dogecoin again was the most popular. And it's a massive driver of their revenue. It doesn't necessarily say that the size of ownership, the actual dollar amount, that's a different equation. This is really about the popularity, that particular graph, not necessarily the percentage ownership in terms of dollar value.
Okay. Well, Fred, some interesting findings in there. Thanks for joining us this morning. That was Finder CEO Fred Schebesta. Coming up, we'll be checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day. Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Hi, Nick. So I understand you are looking at the Financial Stability Board report lately on stablecoins. So what do we know so far?
Good morning. Yeah, so the Financial Stability Board, which is a G20 organized kind of, not a watchdog exactly, but it's this group that basically provides input into the global financial system. It's funded by the Bank for International Settlements, which is, another financial advisory group. And, what the FSB did is they published a report on cross-border payments and payments in general today. And they took a look at stablecoins and said, basically, no one's really using stablecoins at significant volume for retail payments, which, maybe not a surprise to some folks, but it is kind of a little bit counter to the narrative that stablecoins are this, huge and significant part of the financial system right now.
So, Nick, does this give stablecoins a bit of a breather when it comes to federal oversight and some of the beliefs that that perhaps either their Treasury Department or the SEC or the Fed might implement some sort of controls on stablecoins? Does this kind of give a little bit of a reprieve to those stablecoins?
I don't think so. To be honest, I think whatever regulations happen are going to continue happening at their current rate. But if you're a regulator, you want to kind of maybe anticipate some of these potential issues. And so the chair of the FSB is actually the Federal Reserve Vice Chair for Supervision, Randall Quarles, or excuse me, I think his term as vice chair is expiring today. But Randall Quarles has been a member of the Fed for 4 years, and so he is involved, or I imagine he's involved in some of the decision making around stablecoins within the U.S. itself. So, if anything, maybe might embolden some regulators to think, okay, well, they still have a chance to create some kind of oversight framework before this becomes such a big thing that's impossible to constrain.
Nick, I don't know if I'm missing something here, but did anyone ever really think that stablecoins were used for retail payments? I thought, the main idea of stablecoins is that they're kind of like an entryway into crypto markets. Like people are using stablecoins to kind of trade for other crypto, right? I mean, I've never actually heard this thesis that stablecoins are being used for retail payments anywhere. So is there do you see what I'm saying? Is there why is that finding striking?
Well, so I'm not sure if the report distinguished between retail payments for goods and services versus retail customers using it, as you said, as an on-ramp to buy, other cryptos. So a lot of people, they might go to Coinbase or another exchange and, just connect it to their bank account, pay with actual dollars. And that's probably what most people end up doing. But to your point, there are some people who do choose to, use a stablecoin as that kind of bridge. And, the fact that, we have been hearing so much about stablecoin regulation from not just within the US, but from regulators around the world does suggest that, they've been seeing this as a, not a threat, but something to be concerned about, something to be paying close attention to. And I guess the question now is, does the data support, the sheer amount of attention that's being focused on stablecoins, or is it just that, stablecoins have been flashy and, after Facebook announced Libra back in 2019, everyone was really kind of, talking about this particular segment of the crypto market. Is this all just kind of still a reaction to, stuff from years ago and, announcements of products that never launched?
Right. There has been a lot of attention on stablecoins, and looking forward to the Fed releasing their report was out. Nick, thanks for joining us. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Strips Finance raising $8.5 million to launch a new derivatives platform in November that will initially enable interest rate swaps through automated market makers, the decentralized exchanges over which much of DeFi is transacted. Joining us now is Strips Finance CEO Ming Wu. Good morning, Ming. So is there a lot of demand for this interest rate swaps that are based in DeFi? Tell me a bit about this market and why you want to convert this into the DeFi world.
Yeah, definitely. I think that in traditional finance, we know rates are probably the biggest market in traditional finance. And so far, we haven't seen a similar adoption for interest rates DeFi. And so the idea for Strips really came about out of our own frustration with the lack of threat. We could hedge and trade interest rates from different DeFi and also different lending protocols. So the origination of the idea came from our own use case of using DeFi protocols. And so the users initially will be the DeFi, and we believe that there will be an initial demand for this from the DeFi native users, but really the use case is much broader than that.
I mean, what are you using what kind of interest rates are you looking at? Are you doing swaps to get fixed versus floating? Are you doing are you using some sort of reference rate? What are you using for a reference rate? Is it from the traditional markets, or is it solely from DeFi? Is it U.S. Rates versus foreign rates, et cetera? What exactly are we swapping here?
Yeah, that's a great question. So the beauty of strips that we can price any based on a price feed, and as long as there's a reference price that we build an oracle for, users can trade anything from DeFi lending borrowing rates, yield farm yield rewards rates, and centralized exchange funding rates, or even they could trade the Fed funds rate if they wanted to. So the beauty of using derivatives is that you can build a market and of it using a price feed, and this creates a way for traders and for speculators.
So has it launched yet? And if so, where has all the volume been, or any indication of what's the more popular?
So we plan on launching in November, and so we did a test net in August with a limited number of users, and we got traction and feedback from our initial community. And so the mainnet will be targeted to deploy on Arbitrum in November, and we're also looking at BSC as an alternative chain for the deployment for strips as well.
Another question I want to ask you, I understand you're launching on the Arbitrum blockchain. Maybe explain your reasoning behind that. Also, there are a lot of competing products to strips that already exist, such as on Barnbridge and Pendle, but it's been hard to get DeFi natives to switch over to platforms. So how do you suppose to acquire users?
Yeah, so we decided to go on Arbitrum because, our technical team looked at the security scales across the various chains and also layer 2 technologies. And we felt like Arbitrum trade-off between security, speed, and transaction cost. And not to say that we are going to be solely focused on, I feel like the future of DeFi is really going to be multi-chain. And so we've been looking at the chains as well, internally, and assessing which ones would be good to launch on. And the competitors that you mentioned, I think that what they've done is great, and we've taken a very different approach to the problem of trading. And so I think they cater to a very specific use case and a niche market, whereas derivatives, you can do a lot more perhaps those protocols are not able to do. So a very easy example is using derivatives on interest rate swaps. You can actually go 10x on a specific interest rate, and you can go net short. And not only can you speculate on the upside, you can also speculate on the downside.
So, what does this understand about perpetual bonds that you guys are looking to do? It's something from yesteryear in many ways, but do you think that's the future of what we're going to see in DeFi?
I think that bonds in DeFi have kind of been a misnomer in terms of being a traditional, from a traditional financial bond, which is fixed yield and it's a fixed income product. A lot of the bonds in DeFi actually provide variable yields. With interest rate swaps, what we're able to do is actually package a structured product where you have a lending leg plus a interest rate swap leg, which combine together form a fixed coupon bond in perpetuity, which we're coining the perpetual bond.
Got it.
Ming, finally, just before we wrap up, regulating DeFi has been on the minds of the SEC, at least in the United States. SEC Chair Gary Gensler unconvinced that decentralized platforms are completely decentralized. So I'm wondering, how do you hope to navigate regulatory waters globally?
Yeah, that's a difficult and evolving question, I feel. And, as regulators get to grips with DeFi operates and the decentralized nature of these DeFi apps, we are working closely with regulatory advisors and getting legal counsel from our lawyers on how to best navigate the landscape. And as you know, things can change very rapidly in the case of China. So we need to stay compliant, but that's not at the that's not saying that we should stop innovating, because DeFi has a lot of innovative technologies, and regulators should not try to kill that innovation prematurely.
I guess, like, for example, can a decentralized platform really have a CEO?
That's a great question. Yeah. So I would say that, CEO is a very traditional term. I wouldn't really, say that the decentralized protocol has a CEO. We have a team that I think contributes equally to the success of the protocol and success of strips. And so we want to have a decentralized governance for strips where we give the ownership to the users, and that way we can have a truly decentralized for strips.
Well, it's an interesting and ambitious project. All right, Ming, thanks for joining us. That was Strips Finance CEO Ming Wu. Time now to check in with Crypto Twitter for our tweet of the day. And this one coming in from Coinbase CEO Brian Armstrong, tweeting, "Exciting to see every major fintech company is now doing something with crypto. Let that sink in for a moment. And most major social companies, Twitter, Reddit, Facebook. Gaming is next. Crypto is Web 3.0. That's it for First Mover. Thank you, Emily Parker and Lawrence Lewitton. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. And coming up at noon are the folks from The Hash. You're watching CoinDesk TV.